Hey traders, are you ready for some downside in the Dow Jones Index? I know it's a bold statement and I could be very much wrong, but try to give me a second and just hear me out. Today is February the 10th of 2025. Normally I don't really use any indicators like the MACD, the stochastics, or the momentum when it comes to the day trading that I do. But in this case I'm trying to make a bigger view when I look at the daily or the weekly or the monthly chart. And in this case, I believe that these three indicators actually is assisting me in assessing the whole situation. Now look at this. If we go to the monthly basis, you can see that now the market has basically done 4 months in a row. I know we're still working on February, but 4 months in a row where the market couldn't really create new highs. It has been kind of blocked around the 45,000 area. And the interesting part is that the last time we had a similar situation, it was here before 2022 started. But you have actually the market producing new highs, so it's not really equivalent. But there's another situation coming down both here where you have more or less tops, then the market makes a move, but also down here, and this is the interesting one. Here you have 4 bars, or 5 bars actually, even 6 if you count this one, that actually creates more or less the same picture as now back in 2015. That means that for several months the market couldn't really sustain or produce a higher high, and therefore the market dropped about 20% from that time. Let's go back here again. If we look at the weekly, here we go. You can see now that for the last couple of 3 weeks, the market has also tried to produce higher highs, but have failed every single time. On top of that, the story for me that I see in these bars with this long wicks on top of it, or you can call them spikes, is that the story is that the sellers are stepping in. They are stepping in and selling the market exactly like they did here in 2024. So what also indicates for me that something could be going on is if the stochastics indicator does not consolidate above the 80 area, this will be me for confirmation that this resistance that I see to price is actually very valid, and therefore pushing the market even further down. Also, the momentum indicator that I have down here, you can see that the momentum indicator was all the way up here back when the market topped out, but now the momentum indicator is very much lower down. You can see if I try to draw a line here, you can actually see that the momentum on a weekly basis has fallen quite much. And right now, as of this week, I know this is only Monday, but of this week the momentum indicator is pointing down. I also realized that the MACD signal is still very much above the 0 line, and this for me tells that we are still running in an uptrend even with this correction here, because we were still over the 0 line. But if you take the momentum indicator, if you take the stochastic indicator, and if you take, most importantly, the price action up here, if the price action with these indicators shows you that the market cannot produce higher highs, the only thing I would be looking for is that red takes out green in this area, and this means that if the market goes underneath these weekly highs or in these opening prices, I will be the one shorting them. The question, of course, how far will it go? I have no idea, because this will be very hard to predict. But what would be obvious would be that the market would at least try to make a bounce down here around 42,000. This is about 5.6% down, 2,474 points from where we are now. It will try to make a bounce here. But at the second time, I actually think, honestly, that it wouldn't surprise me that if the market went all the way down to this support area, which also was previous resistance from when the market moved up, and this is around 40,000. So now we're talking a 10% drop. But the, best case scenario if you short the market would be that the market actually tries, like the last time, you can see here and here, to go as close to the 200 moving average as possible. And that would mean about 18% drop from here if we go all the way down to the 200 moving average. This is just theory. I'm not saying that it's going to happen. I encourage you to do your own due diligence, but this is just my take on it. And since the market has been going up for so many years, so many months, so many weeks, I'm also ready to play the downside. Thank you so much for watching. Remember to subscribe and like this video, and if you put some comments below, I will be happy to answer your questions or hear what you say. Bye for now.